Hey guys, welcome back. Patrick here. In this video, we are going to talk about the market and what is the strategy that is working right now. I know a lot of people are struggling with this market, and I understand. There's a lot of zigzags. Anytime you think that the market's going up, then we see a crash and we lose all of our gains. So despite that, my strategy has been working really well, despite what some people in the comments usually thinks. Right? There's a lot of trolls on YouTube. I'm going to show you exactly what I'm doing and what you can do yourself. I mean, it's not that difficult. It's really not rocket science if I can be successful doing it. All right, so let me show you my account. This is my E-Trade account, up 141% this year. If you look at the 1 year, and I'm not saying I'm the best, right? There are some other people on YouTube that probably did better, especially in 2020. The market was skyrocketing. I did pretty well with the SPACs, right? You see these big inclines here, but then when that strategy stopped working, I found the different strategy that I used to do before 2020. So far this year, I'm up 42.54%. That's 3 times the S&P 500. And the goal here is not to pat myself on the back or anything. It is to show you what you can do to get these results. I mean, if you can get 30+% per year, your account is going to go up very, very rapidly. So in this video, I'm going to show you how to do that. All right, so first thing you need to really understand is that a lot of the stocks that we buy have not been performing well at all this year. You know, you probably hear all the time in the news media and all of that the stock market is reaching new highs and everything. Well, we haven't really seen that in our stocks because most of us invest in smaller cap stocks that are kind of what I call like the Russell 2000 type of stocks. Right, so not really Amazon, Google, Facebook. You might have some in your portfolio, but I feel like most of your stocks are probably a little bit more speculative, kind of smaller cap stocks. Well, if you look at the chart, you can see that since the beginning of this year, we've been stuck in this channel where every time the stock reaches down to about 2100, it tends to rebound, but it can never go above that resistance, which is around 2300. Right, so it's happened multiple times this year. That's why we see these mini crashes all the time. Right, if you can actually buy here, then you're probably going to see a nice little uptick, and then everyone's excited again. Oh, the market's back, you know. But the thing is that they keep talking about COVID. They keep talking about inflation, you know, the rate hikes, and there's always news that make it so the market tends to correct itself. And we see like it kind of reverses back to where it was before. I mean, this has been happening for months and months and months. Right, so there are a lot of stocks that I own or that I've talked about on YouTube that frankly I'm kind of disappointed with. All right, so you have stocks like TTCF. It's at 1849 as of me filming this right this weekend. But look at how, you know, you get some nice spikes to 25 and then it just crashes back down to 18. It's stuck in that range, like we saw with the Russell. Sofi, same thing. I can't think of anyone that believes this stock is not going to do really well in the future, especially if they can get their bank charter, right? But so far this year, like my timing wasn't the best with this stock. I mean, it's been mostly flat for several months now. Play Studios has actually gone down, right? I started talking about it at 780. I still believe very, very strongly about this stock, but I thought that it would kind of stop bleeding at 6, consolidate, and eventually go back up. I usually don't like buying falling knives, but in this case, I made a mistake, right? I got into this one and actually went all the way down to $4. So you have other stocks that are very popular on YouTube. Palantir, look at how barely moved in the past year, right? CRSR has actually gone down. You know, there's a big YouTuber that keeps promoting this stock. Well, he bought into it in the mid 30s. He actually did a terrible purchase on this one, whether they want to admit it or not. But now it's down to 26. Doesn't mean that the stock's never going to rebound, but the timing was very bad for it. All right, so with all these stocks in our portfolio, we're bag holding some of them, including myself. How can I be up 42% this year? Well, it's very easy. If you look at the breakdown, there are some months where I did really well when the stocks were going up, right? They had those spikes that we saw. And then there are other months where I didn't do as well. Down 2% here, down 7%. September wasn't the best month. I was down 0.72%. But it's a little bit misleading because if you look at like the settled transactions for the month, this is from the 1st of September to the 30th, I actually made 8,000 profit, right? So there's a difference between the stocks I'm holding long term that I'm not really buying or selling, those ones, sometimes they go down, sometimes they go up, but they don't really affect my real performance. What really matters is the options that I'm selling and buying. And these ones have been mostly successful at 8,000 in the past month. And that balances out those stocks that, haven't really been doing anything or gone down. That's the beauty of holding stocks long term. That is why it is one of the most reliable strategies out there, is because once you own it, unless you're actually using a lot of leverage or doing crazy things, I mean, there's no real pressure. You can sleep well at night. Like, they're going to go up, down, but overall, if they're quality stocks, over time, they should be going up. What really matters, what is much more time sensitive, are the options. The options, that's why they're so difficult. You have to time, like, the direction. Is it going to go up? The strength of the movement, the timing of the movement. That's why I generally don't really like buying options. I would much rather sell options. You guys know that. This is a low risk, medium reward strategy. I am able to get more than 4% per month in returns. That's my objective. And as you can see, I've been able to do it again this year, right? Beating the S&P 500. Well, there's no, it's not a rocket science. You can do it very easily too. And I'm going to show you how. The first thing you need to do is figure out what percentage return you want to get in the next year. All right, so this is going to vary for everyone. I'm going to give you my baseline. I want to get 30% per year. I feel like if you can achieve that and compound that year after year, you're going to be a genius level investor, right? And then if you want to break it down to make it a lot easier on yourself, because if you just think about 30%, it can be a little daunting sometimes. But if you actually divide by 12, because there's 12 months in the year, that's just 2.5% per month. That's a lot easier, right? What plays can you do in the stock market where you're going to make 2.5% per month? Well, that's when you do really basic strategies like covered calls and selling puts, cash secure puts. Or if you want to be a little bit more advanced, you can do the actual put spreads. You can do iron condors, all sorts of crazy option plays. But if you want to keep it very simple, for those of you that are a little bit more passive, don't have as much time, just with covered calls and cash secured puts, you can easily get 2.5-3% per month. Personally, I aim for 4%. Before I wrap up the video, let me give you a real-life example using a stock that you might already own in your portfolio, Sofi. I used to have warrants, I sold them, but I still have my shares, which are kind of underwater right now. How can I actually make 4% with it, especially knowing that I think it's going to go down in the next month? The warrants are going to become exercisable, and we saw what happened with Lucid. It tends, at least temporarily, to put some selling pressure on the stock. All right, so how can I earn 4% on this? Well, you guys probably know the strategy already. I'm going to show you how with covered calls you can easily make that. Whether the stock goes up or down doesn't really matter, right? We're going to be making that cash flow, and it's going to help build our account pretty rapidly. So let's look at Sofi. Let's look at the November 5th options, so 1 month from now. If we look at the $18 strike price, so that is $1.55 higher than the current price, right? So that gives me a lot of padding. And the way to calculate your break even, you're going to do the strike price plus the premium that you're collecting. So in this case, the bid is at 75 cents per share, so $75 per contract. I would add that to the strike price. That would be my break even, $18.75. So as long as the share price stays under $18.75 in the next month, this would be a profitable play. Now it's up to you. Do you think it's going to go higher than that in the next month or not? Personally, I don't think it is. So I feel like the odds are very, very strong that I would keep that full premium of 75 cents per share in the next month. All right, so what returns would that be? Well, to calculate that, you're going to go to your calculator, do 0.75 divided by your cost basis. So if you bought for $12, then that would be 0.75 divided by 12. In this case, we're going to assume you don't have a position in the stock, you're just opening it, right? So tomorrow is 16.45. Well, that would be a 4.5% return in the next month for this position. Whether the stock goes up, down, sideways, doesn't matter. That's baseline, you're going to be making that. Do times 12, right? You're over 50% returns in 1 year, just with this super simple strategy that everyone already knows about. They just don't do it because they're scared. All right, so this is the big deal, is that people are scared that, Patrick, what if the stock price goes $20? I'm going to lose my shares. I want to be in Sofi. In this video, I'm not going to go over how to adjust your position. Right? I have stocks that have been underwater by over $20, and I'm doing fine with it. Right? I just keep rolling it out month to month. I'm not going to talk about it in this video. I've talked about it in previous videos, and of course, I explain it in the Patreon if you guys want to look at the link below. But suffice it to say that worst case scenario, like if you didn't adjust your position, you don't know what to do, you would make a very, very good return anyway. We already said the break-even price is $18.75. So it would be, if you were exercised, it would be as if you sold for $18.75, which is probably higher than your cost basis already. So to calculate that, you would do the break-even minus your cost basis, right, divided by the current share price, or what I bought it for, and that would give me a 13.9% return in the next month if I open a position tomorrow, sold those $18 strike price calls, and the stock went to 20 and they got exercised. Now, let's be totally honest. Like, I know we're afraid of some things, but would you really complain about a 14% return in 1 month? Like, extrapolate that to 12 months. Like, you are at the genius level investors if you can do that repeatedly. It's not a big deal, especially if you know how to adjust month to month. And this is how you can actually be successful, whether the stock goes up. Like, if it goes to 17, doesn't matter, I'm collecting 75 cents. If it goes down to 15, yeah, it stings in the, in the short term, because I wish the stock went up, but I'm collecting that cash flow over and over again. So it's a lot easier if the share price goes down, because then I don't even have to worry about adjusting. I just keep my premium, and I know that over time, whether it's in 2 months, 6 months, 2 years, Sofi is a great stock, it is going to go up. So that is the strategy, how you can be very successful no matter what the market does. I'm going to try to reach 50% at least this year. Let me know if you guys try it. Of course, if you want to learn more about that, like I have another one. I just made a video for the Patreon where I'm selling a cash secured put that I expect to get as much as 10% in the next month, right? So I didn't want to spoil it on YouTube, but if you guys want to check that out, you can look at the Patreon in the description. And I'll see you guys in the next video. I hope this was helpful.